What is it about spring and Sunday evenings when it comes to financial markets? Regional banking crisis, right?
Can I just say, I feel like it's been every Sunday night
Day,
since we have started 2025. So I guess on one hand, what is it about Sunday night that always gets me glued to my terminal?
I think I said years ago, the year begins in March.
Yeah.
You know, everyone puts out these forecasts looking ahead to the year ahead. January, everyone gets together and talks about it. You get to March and everything resets.
Yeah.
And resets pretty quickly.
Here we are, doing the same thing.
Here we are.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. Guys, understanding market cycles, mastering market cycles, especially here in year 6 of the decennial cycle, can really help you compound your wealth this year and to the end of the decade. Understand the mathematics, the probability of how these cycles play out. This has nothing to do with bias, nothing to do with emotion. It has to do with market data. And I'm going to share a couple of these key cycles today with you in this video. If you notice in the intro, Jonathan Farrow, that's from this morning. They just completed an interview of Alicia Levine, and he starts opining and just noticing casually, what is it about March? What is it about March in the spring that you tend to see dramatic events happen in the marketplace? And he listed a couple in the background as Lisa started talking. He listed the tariff sell-off of last year. He listed the regional banking crisis. He could have gone a step further and talked about when the pandemic actually bottomed. When did it bottom? March 23rd here on the weekly candle. Main events, key events in the marketplace happen around 2 cardinal points in the market: the spring equinox and the fall equinox, within 30 days of those cardinal points in the market. By the way, not just this cycle, but going back to the GFC.com and of course 1929. When did the market top? Within 30 days, actually I think 8 days after the spring or fall equinox, the market topped in 1929 and then declined 86%. These are key market turning points. Let's just look at this cycle and we're going to advance through some charts. I talk about these cycles all the time on our Discord, guys. If you guys are interested in getting those Discord videos, hanging out in the chat, check out the join button right there on YouTube. You can also just get my member videos right here on YouTube for your viewing pleasure. So let's go ahead and start off with this cycle. Spring equinox, bottom of the pandemic sell-off. We had spring equinox and the counter trend rally after the top here in 2021, the inflationary cycle. Then we had a big sell-off. What was that sell-off? Let's just measure a couple of these. Spring equinox counter trend rally, tops on the spring equinox. What do we get? 1,000 points down after that near term, and then finally settling at 1150 down. When did the market bottom in the 2022 sell-off? It bottomed within 30 days of the fall equinox. Amazing, right? October 10th, weekly time frame here. When did we have another bottom after a nice 10-12% retracement here? On October 23rd, within 30 days of the fall equinox. And of course, the big tariff sell-off that we had, when did we bottom? We bottomed April 7th, within 30 days of the spring equinox. What's significant about this? Let's go ahead and look forward. What is coming up on March 20th? March 20th, which is on a weekend, we have the spring equinox. You have an up arrow, you have a down arrow. Which way will the market go? Well, to answer that question, tell me which way the war is going to go. Are we going to declare victory in a tweet at some point in the next few weeks? I think the market's going much higher. I think you're running into the summertime for a rally. Are we going to install ground troops in the next few weeks? And this could prolong and protract out a few more months. In that case, the market would be going lower and doing a full retracement. We're going to look at the TA on this, but this is a key turning point, the spring equinox coming up. You can see it in this cycle. You can see it in past cycles. .com. When did the market top in .com? On the day of the spring equinox, to the day, 50% decline in the S&P. When did the market bottom? 2 years later, within 30 days of the fall equinox in 2002, October 9th. Again, this is a 3-day chart. What about 2007, which was not even an equity bubble? It was a housing bubble. We topped within 30 days of the fall equinox, October 9th, 2007 on a 3-day chart. And when did the market bottom? The market bottomed 2 years later on the spring equinox, within 30 days of the spring equinox, there in early March. Key pivotal points. And as I said, 1929, you topped just days after the fall equinox. These are key turning points in the market, and you are coming up on that turning point right now. Now, a couple charts I want to share with you. 2 key cycles to compound your wealth here in 2026, and one of them has a 100% hit rate. Lee, throw up the chart. This is commonly called the January effect. Now, you can screenshot this, but I'm going to post it on my X. And this is, you can follow me there at Market Canary. Lee, throw that little tag thing up there so people can see it. Give me a follow at Market Canary. I will post it there as well. We made this chart. What I did was 2 different things here. This chart shows 1990 to 2026. That is 36 years of data. Look at this chart. Every single time the first 5 trading days in January have traded higher, you have had 100% of the time the market finish green for that year. That's very important. The average gain of those green years is 21%. The best gain was 37.5%. And every single time, 100% of the time, you finish green. You've done this 24 times since 1990, 24 times out of 36 years. And guess what? 2026, you trade it higher the first 5 days of January. January effect cycle is in play. Now, that doesn't mean you do not get retracements, but it means you will finish higher since 1990, 100% of the time. And you could say, Brendan, that's only 36 years of data and 24 instances. That's not enough instances for me. Well, let's go back to the 1950s at the inception of the S&P. 83 to 87% of the time since the 1950s, you have finished higher in the S&P for that year when you have the January effect. Let's just call it 80+%. So 8 out of 10 times since 1950, you have finished higher in the S&P. Well, actually, the S&P was invented, I think, 57. But since the 1950s, 80% of the time, you finish higher. And since 1990, 100% of the time. Now, I know some of you out there, especially people that want to be very bearish and want to look at everything from a doomer lens, because that's what YouTube really gets all the clicks on, is the doomer videos. Well, if you want to look at it from that lens, you're probably saying, that's still not enough data, and that's just one cycle. How could that possibly be any type of determinant for how 2026 finishes? Lee, next slide, please. Let's look at year 6 in the decennial cycle. How about 200 years of data? Is that enough data? 200 years of data back when Joe Biden was a little boy. Look at how the market has finished. 85% of the time, year 6 in the decennial cycle finishes green. 85% of the time. Combine that with the 80+% of the time for the January effect. What you're looking at from a mathematical model, a probability in the marketplace for the year to finish higher is an 8 out of 10 chance, greater than an 8 out of 10 chance the market finishes higher on the year. If you understand that, it will frame how you look at retracements. It will frame how you look at quote unquote market tops and how deep they can go down. Because if you're looking for a 50, 60, 70, 80% crash, just understand since 1928 to 2025, any given random calendar year has less than a 2% chance of having a 50% drawdown. 98% of the time, you will not have a 50% drawdown in that year. And when you start combining this with other cycles and in future future videos, I'll cover some more cycles as well for you. But understanding the mathematics of the market can really unlock you and set you free in the marketplace. Let's continue to some charts. By the way, guys, everything I show you here can be traded on SimpleFX. If you live outside the USA and Canada, check out SimpleFX because you can trade the VIX, you can trade global indices, global equities, metals, everything. You can be a market maker's VIP with our fantastic bonus. Everything is right there in the link in the video description. Longtime friend of the channel. I would appreciate it if you check them out. Helps us out. VIX, we hit our target. We hit our target back in October, the projected target. Back in November, the projected target. And again, here in March, we hit our target. Then we retested it. Then we broke through it with the panic over the oil crisis, right? The projected oil crisis. Now, I started off my career trading energy. Something that's important to understand, and again, it's an opinion, but well, it's actually not. You can check it with facts, but understand there's no shortage of oil. This is not the 1970s, which is people are using that as an analogy for an analog of where we are now. But this is not the 1970s. We have plenty of oil. Saudi Arabia has plenty of oil. The Gulf states have plenty of oil. The problem is transportation. This is a near-term problem. If they come up with a workaround for it or whatever, you will see oil, commodities mean revert more than any other asset. You will see oil drop like a rock when either the fighting stops or they work out the transportation for oil. So just keep that in mind. But we got a spike. Is this spike up to 35 in the VIX? Is that enough to be a washout for capitulation? I don't know. Maybe. I believe we are in what? Extreme fear. Close to, extreme fear today here on the Fear and Greed. So keep that in mind because extreme fear can mark bottoms. Doesn't mean we can get more fearful because we surely could. Let's look at the Dow. Dow futures hit our projected target on February of 2026. This was my projected target in 2025, so I apologize for the 5-week delay in getting to that target. 50,492, but the key takeaway here on this chart, guys, is your support structure. October, November support structure. You came down into the buy box. You hit the 108 RMA. This will resolve. I'll show you this on the S&P, but this will resolve one of two ways. Tell me how the conflict goes. I will tell you how it resolves. It will resolve potentially with, say, a lower high and a struggle and a breakdown. You could break down the test that support, get more bullish, and resolve back to the upside, which again, my bias is once we pass this conflict, we are going to be running into the summer on a rally. You could just have something come out again and shock you, spike in oil prices, come down and just start capitulating out of here, in which case you have broke your intermediate term uptrend since April of last year. That is broken if you take out that October low on the Dow. We shall see. This can resolve multiple ways, different patterns. You could sell off, get more bullish, come up, get some retracements, and then break out again. Don't know. We're just drawing squiggly lines here because I don't know how the conflict's going to go. My bias, though, is this will pass and look towards the cardinal point in the market coming up later this month. If we look at ES, S&P futures, this is going to be the exact same concept. We fell right to the 108 RMA, just like we did on the Dow, just like we did on the NASDAQ, because it's the same players in all of these markets, and we bounced off of it. We are in the support zone. In this case, your November low is your low. Your October low is slightly higher up. Just remember, just put this in perspective. Frame this around your brain for a second. Everybody told you, or the people that are bearish, I should say. I tend to speak in broad generalizations, as you guys know. But lots of people were very bearish in October, said that's it, the top's in, 50%, biggest bubble in world history, right? What happened? You went on to make a new all-time high. Then in November, you retraced. Those same exact people, many of which go on the exact same podcast, said, this is it. This is it. This is the 50% sell-off. This is why I'm bearish. Oh my God, take profits, whatever. And then what did the market do? It went on to make new all-time highs again out into January, all the way out here as well. When was this? January 28th was our last new all-time high, intraday basis there. So we went out and made new all-time highs, and now we're retracing. Now we have open war. Now you have the oil shock, which again is temporary, but now you have the oil shock. So now everybody's max bearish again, right? Everybody's max bearish. Again, this can resolve a couple of different ways. We can take a fib from our all-time high to that current retracement low. Look at your resistance levels. 68.13, 68.67. Let's just call it 68.50. You could come up. You could fail. Maybe ground troops go in. Maybe Trump says something that upsets the market. Maybe something happens with oil. But you could fail. But the support is not broken. The trend is not broken unless you take out 65.25. Then your intermediate uptrend is broken from the April sell-off lows of last year. Because you can also come up. You can pull back. You can make a bullish pattern like higher lows. Our members will recognize that as a W pattern, higher lows, break back out to the upside, because ultimately I think you're going to be rallying until the summertime once this all resolves. But again, open war, any catalyst, right? You could have a black swan catalyst, could take this out. But the key thing to know on all these indices that we're looking at, you have to take out either your October or November low, whichever one is lower. And in this case, it's your November low on ES S&P futures, 65.25, because until then, you're in a range, 65.25 to your all-time high, chopping people up and down. Some nice buying demand today, even with the oil shock. Let's go ahead and look at what we got here on the NASDAQ. Again, intermediate uptrend since April 2025. All-time highs were made. Almost made another new all-time high back here in January. And we are going sideways once again. Fell right to the 108. Where is this bearish? Let's just pull a fib from this recent near all-time high down to that current level low. You got resistance at 25,175, 25,450. So let's just say 25,250 between a 50%, 618. Right there with those candle wicks. If you come back up here and start to roll over again, that is a near bearish action, right? I mean, it's bearish. You're rolling back over, but you're not bearish in the trend. End the trend until you can break key support, which again is from November. That's 23,904. Break below that. Maybe you get a nice retest for a short. If you're bearish, that's a potential short. You're bearish, that's a potential short. Works in reverse for longs. If you come up, fail here, pull back, retest this, come back up again. You have multiple entries possibly for longs. Ultimately, our next target is 28.2 on the S&P futures. You're looking at 7,500. Those are the next targets. Once we get through the crisis that we're in with oil and with the war in the Middle East. Guys, hope you enjoyed this video. Let me know if you like learning about cycles, because I love teaching about cycles. Consider joining our Discord with the join button. I really appreciate everybody's support. I'll try my best to answer every single comment. I apologize if I miss a couple. Take care, everybody. Bitcoin video is out next.